With the increase in interest rates and home prices, we are seeing more and more clients utilize cosigners in qualifying for the mortgage to be able to buy their home. We're going to run through today some pros and cons, some tips, some alternatives, and just some good info that you need to know about before you either have a cosigner or you become a cosigner. My name's Miles Pitcher. I own Superior Lending. I've been in business since 2001. Thanks for watching this video. So here's what we're covering today. What is the difference between a cosigner and co-borrower? Pros and cons, loans that allow it, and then some tips and alternatives. But first, if you find any value, do me a favor, give me a thumbs up on this video. Just hit that down at the bottom. Thank you. All right, first of all, a co-borrower is someone who is going to sign on the loan. They will still be obligated on the mortgage. They may or not be on title, but they will occupy the property with you. They will live in it. So that is a co-borrower. Or if it's an investment property, you both own it as a partnership and you're involved there. Okay, cosigner, sometimes we call this a non-occupant co-borrower, meaning that you're obligated on the mortgage. You may or may not be on title, but you will not live in the property. You most likely are a relative and you have a residence somewhere else. Okay. What does cosigning help with? So one of the things that we run into or questions we get all the time is, hey, my credit's pretty bad, but my parents' credit score is in the 800s. Can I have them co-sign with me so I can use their credit score? The truth is, a co-signer's credit score will not help you, but it can hurt you. So if their credit score is higher than yours, it's not going to help you. If it's lower than yours, the co-signer's is lower, it can hurt you. So really, credit score isn't a big factor here. The big factor, big reason we use cosigners is if we're having issues with income and how we measure how much of your income goes to pay your monthly debts. We call this a debt ratio, meaning your student loans, your credit cards, your car payments, and other monthly debts you pay on, the total of those plus the mortgage, what percentage of that monthly payment comes out of your gross monthly income? So if we need to bring in a co-borrower, or I'm sorry, a cosigner, that's what it's helping with. All right, loan types, conventional, yes, absolutely. FHA, yes, we can. VA, yes. And there's a caveat here though. If you're trying to do a VA loan and bring in a non-occupant co-borrower or even an occupant co-borrower that is not a spouse and they are not a veteran, there's a bunch of different rules. I'll link to the video that goes through that. You may not be able to do the 100% loan. USDA is a 100% loan, but they do not allow cosigners. Jumbo is a maybe. Each lender has their own set of guidelines, so you'll have to check with your lenders to see if you can do a jumbo loan with a cosigner. So here's some of the pros. Just being willing to help someone. Maybe you have some kids that, they need to get into some home ownership. You see the value in owning a home. It would be good for their family. It would put them in a location where there's good schools. This is a good way to help them out. Your credit score may actually get a boost from this because once they start making a nice history of mortgage payments and those payments reflect on your credit report also, that could boost your score. The other piece to this is the credit mix, meaning if you don't have a mortgage on your credit report, maybe you just have installment loans and credit card debt, this mix could be a benefit to you as being the cosigner. Some of the cons, the obvious one is if the borrower stops making payments and you don't know about it, your credit could get ruined, dinged, it could totally get hurt. Everybody goes into these thinking everything's going to work out just great in this, but just be aware, sometimes if something goes wrong, it can ruin your relationship or put some stress on it. You also need to be aware that if you co-sign, this debt is going to show on your credit report and will be counted in your debt ratios, which could limit you in your future qualifying ability. I'll cover some tips on this here in a minute. And again, everybody thinks everything's great going into a co-signing situation, but just be aware it can get messy if there's a divorce or a bankruptcy or something that happens either on the borrower side or on the cosigner side. It can add some messiness to it. So some alternatives. You can, rather than co-signing, maybe you can gift a large chunk of money to this person, the borrower, so they can do a larger down payment and they can make the debt ratios work in qualifying. Or maybe you can have them use some of the funds that you gift to them to pay off some of their debts. Like maybe they have a car loan and you can help them get that paid off. Now they can qualify on their own. The other thing I've seen it happen is, maybe a parent is pretty well to do. They come in and they buy the home and then they work out some arrangement with the kids for them to live in it, rent it, or do like a rent to own situation. There are times where you need to just have a conversation and say, you know what, you need to start smaller with maybe a small condo rather than trying to go for the 5-bedroom single family house right out of the gate. Maybe something not as nice, or you may need to wait a little bit. It happens. Let me give you some tips. So the first one here is kind of mortgage geek speak, and this is the contingent liability rule. So what this is, let's look at it from the viewpoint of a cosigner. The cosigner is obligated on the mortgage, but the borrower, let's say it's their son, has been making the payments on time out of his own bank account with his own funds for 12 months. If he can show 12 months of on-time payments by himself, the cosigner, the parents, can get record of that and have, if they're qualifying for a new purchase or another refinance, another mortgage, they can say, look, our son's taking care of this, and the debt is excluded out of their debt ratios. It's a very cool rule that a lot of people don't know about. So this is one of the reasons why I really like to have the borrowers make the payments themselves if they can, and do it out of their own bank accounts. But this then leads to the question of, well, how do I know then that the payments are being made on time? So on that, I would definitely get the logins to the lender, be able to watch and log in and verify that the payments have been made on time. This is super important that it happens. If you have to step in and make a payment for one of the borrowers, that is way better than you getting your credit ruined or trashed. Before you co-sign, always have a refinance plan. We do this and talk about this all the time with our clients, saying what has to happen over the next 6 months for the primary borrower, maybe it's a year, for them to be in a spot that they can refinance. Maybe they're self-employed and they haven't quite hit the 2-year mark. We go through exactly what needs to happen. You need to plan ahead on that. I'd also look and just plan for the worst case scenario. What happens if the home goes down in value? What happens if rates go up and you can't refinance? What are you going to do? The other piece is, as a cosigner, I would encourage you to just have your name on the title so that if for some reason there's any change in title, the borrower tries to deed it to someone else or sell the property, or there's anything filed against the property, you will get notified because you're on title. Okay. One tip there is that, let's say you're the cosigner and your kids, you're helping out. Maybe your son is the primary borrower and his spouse is not going to be on the loan initially, but she's self-employed and very soon she'll be able to qualify. After you close on the property with your son and yourself as the cosigner, you may want to add her on title so that when it comes time to refinance and get you off as the cosigner and have her on, she has time as being on title. That can be very beneficial. But again, that's where an experienced loan officer can come in and help you plan on how to get this taken care of down the road to get refinanced off of the loan. Please feel free to reach out to me, my team, if you have any questions or scenarios that we can help you with. We love strategizing. We love helping people figure out this market that we're in with affordability. Have a good one. Thank you.